Stock trading tips for advanced Fibonacci traders. Stock trading tips for advanced Fibonacci traders. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Fibonacci trading, our website is www.dayprotraders.com. The title of this video is Stock Trading Tips for Advanced Fibonacci Traders. In this tutorial, I want to share with traders, stock trading tips that advanced Fibonacci traders can apply, using the 138% Fibonacci extension level. All right. If you are using Fibonacci, if you are an advanced Fibonacci trader, you must understand, the importance of the 138% Fibonacci extension level. It has a connection with the wave principle, and it is a powerful reversal zone. Very, very powerful. All right. You need to understand what is taking place and what is happening around the 138% Fibonacci extension level. I want to explain something to you, and you promise me that you will always remember that. Okay. So in an up move, the price must display higher lows and higher highs. Yes or no? Okay, we all know that because we are advanced Fibonacci traders, okay? But one thing is very important. If the price forms a high, and the price breaks above that high, the critical resistance level that the price must break is the 138% Fibonacci extension level of the prior move. Now, because you are an advanced Fibonacci trader, you want to get this right, okay? So prior went up from A to B. So this is the prior move from A to B. And then the prior pulled back. So this is what I'm calling the prior move, okay? I'll color it, in fact, into orange. So this is the prior price move. Prior went up from A to B and then pulled back, okay? Now price break above, the initial high. This is the initial high. Let's color it also into orange. So if I'm talking about initial high, you know that's the orange line, okay? If the price break above the initial high, the ultimate challenge for the bullish trend is the 138% Fibonacci extension level of the prior move. Are you with me? If the price does not find a support above the level of 138% Fibonacci extension level, there's a high chance that we may see a reversal. This is a powerful stock trading tips. So remember that. So whenever the price breaks above the previous high, highlight the 138% Fibonacci extension level. Very often, not always, the best overbought and oversold will take place on or near the level of a 138% Fibonacci extension level. Many financial instruments that are not dynamically bullish or bearish will fail to go above the 138% Fibonacci extension level. So as the price breaks above, the initial high, we want to look carefully whether it's going. So if we buy above the previous high, and the price going up, we can take profit as the price reaches the level of 138% Fibonacci extension level and wait and see whether it's going to find a support above the level of 138% Fibonacci extension level. That's the biggest challenge for any bullish progression and also for any bearish progression. So in a downtrend, what is happening, my friend? The price went down from A to B, and it starts breaks below, the previous low. This is the previous low here. All right, this is the previous low, breaks below it. The challenge for the bearish momentum is the 138% Fibonacci extension level of the prior bearish move from A to B. If you understand that, you become, if you understand and you know how to use that, you become an advanced Fibonacci trader. The 138% Fibonacci extension level, either in an uptrend, in a downtrend, is a powerful reversal zone. One is likely to see a reversal around the 138% Fibonacci extension zone. On the other hand, the best breakout or breakdown will take place above the 138% Fibonacci retracement level or below the 138% Fibonacci extension level. It's a powerful level that we are monitoring all the time. This is a powerful stock trading tips for advanced Fibonacci traders. All right, but the tips that I want to share with you, so I clarify that and assume that you are an advanced Fibonacci trader, and I will not repeat myself again because you are an adult person, you are a mature trader, and you can understand my accent, okay, and everything that I've said now. If there is something you do not understand, put in the comment section, and then we will get back to you, okay? So I have clarified the importance of the 138% Fibonacci extension level. The tips that I want to share with you today, the stock trading tips that I want to share with you today is this, okay? So price went down from A to B, formed the first high, okay? But now let's start afresh, okay? Let's go directly to the tips, okay? I don't want the video to be too long, so let's see first how I'll be talking to you. I want to share one tip with you that will stick into your mind. We are looking for two highs, the first high and the second high. So we're looking for a high and a higher high. So I'm sharing the stock tips now. A high and a higher high. Okay? So there is one on this chart. We are looking at the Milan stock. Epic MYL. Okay, Mike Yankee Lima, listed on the Nasdaq 100. So we are looking for a high and a higher high, okay? So there's one here, a high and a higher high, okay? Then we draw a line, a trend line through these two lines, 2 points. So then we draw a trend line through these 2 points, okay? So this is the blue line here, okay? Now, if the price pull back, so this is a high and a higher high. Now we draw the trend line, okay? This is it, okay? Now we want the price to pull back from the second high, pull back, and now go back up to retest the trend line. So a high and a higher high, we have our trend line. You can see here what the price did over the year. It went down, yes or no, okay? It went down. And slowly but gradually, we are waiting for it to retest this trend line for the third time. So first time, second time, and it's the third time. So we have a high and a higher high. We draw the blue line. We are waiting for the price to go down first and to come back and retest that trend line. So this is why we see a high and a higher high. Price went down, blah, blah, blah. And finally, it came back here to retest it. So we are here now. Are you with me? So if it hit the trend line, we want it to pull back. And then to start going up. So as it touches here, for the third time, we want it to pull back and start trying to break the trend line here to come and touch it again, and you see to go above it. If it goes above the trend line, we must watch which level? The 138% Fibonacci extension level. There is a high chance that the price will find a resistance somewhere near that Fibonacci level, 138% Fibonacci extension zone. So a high, a higher high, price pull back, went back up to retest the trend line. Now we want it to go down and to break above our trend line, our bullish trend line. If it breaks above the bullish trend line, we must watch, highlight the level of 138% Fibonacci extension level of the prior move. What is the prior move? This one. This is the prior move. The move that brought the price up to retest the trend line for the third time. This is what I call the prior move. So here you see, we have this high and this high. Price went down, and then it went all the way up here. The move that brought the price up. Now, there is a bit of problem here. So we will apply the Fibonacci extension to this prior move. The move that brought the price to retest the trend line for the third time. This is the price action that we must apply the Fibonacci extension to. So you want to know the section to which you should apply the Fibonacci extension to is the move that brought the price to retest the trend line for the third time. Okay, you get it? So, and then you want to highlight the 138% Fibonacci extension level. Now, if you look on this chart, sometimes you may see strange thing, all right? So I'm going to remove Saline, and I'm going to remove my Fibonacci. So you can see this is 138% Fibonacci extension level, and you can see that I draw it from here instead of here. So let's go back now and draw it from here. So we start. So this is what we are doing. We are applying the Fibonacci extension to the price action that brings the price to retest the trend line for the third time here. So this is it. So we start from here all the way up here. We apply Fibonacci extension to that. Where is the 138? 138% Fibonacci extension level on the dot. That's where the price found a resistance. Powerful stock trading tips. All right. Now, you can see sometimes it can be messy. You may see that. So all you want to do, you want to know where is that 138% Fibonacci extension level. So you don't want to assume that, okay, this is what I just said, exactly this was happened last time, it will happen again. No, you will apply a top-down trading method. Okay, all right. I'll place the link, okay, in the description section, all right? So check it out, okay, the video about the top-down trading method, okay, in the description area, okay? You need to know, all right? So as the price visited, okay, the level of 138% level, we apply top-down trading method. We are on a monthly chart. Okay, the one example of top-down trading method, we will see the setup on the monthly chart. We will validate the setup on the quarterly chart or yearly chart, and then we use the daily chart for what? Our signal, and then we will use the hourly chart for the entry. For the entry, we can zoom into it all the way down to the 10-minute time frame. We don't want to violate the market patterns, and we want to check the economy news. The market environment will influence all technical trading setup. Market environment, economy news can change the dynamics of the market. Check Google Finance and Yahoo Finance, and do a little bit of fundamental analysis before selling and forget. Okay, because the normal progression of the market is to go up, and when you're about to sell, so do a bit of fundamental analysis. Check the economy news. So when you see a bearish trade setup, okay, a higher high, we want the price to pull back and to go back to retest the trend line, okay? Now, the move that brought the price to retest the trend line for the third time, we apply the Fibonacci extension to that price action. We highlight the level 138% Fibonacci extension level. It's a possible reversal zone. All right, now price pull back, break above the trend line. We are watching the reaction of the price. We can analyze the candlestick pattern around that level, and we use a top-down trading method, or we can use call option, put option to trade it. Okay, the opposite is also true in a downtrend. So in a downtrend, what are we looking for? Okay, I will draw here. So we are highlighting a low and a lower low. Okay, all right. So price rally up a bit, okay, and then pull back to retest our trend line in a downtrend for the third time. We'll apply Fibonacci extension to this move that brought the price to retest the trend line, this bearish trend line, for the third time. We apply Fibonacci extension to it, and we will highlight the Fibonacci, the 138% Fibonacci extension level, which is likely to become a possible oversold zone because we are in a downtrend now. So now we want the price to rally up a bit and now to break below our bearish trend line towards the level of a 138% Fibonacci extension level. Very often, powerful reversal will take place on or near the 138% Fibonacci extension level when we apply this method: a high, a higher high, and the third time a pullback and a breakout above the trend line, heading towards 138% level in an uptrend, or a low, a lower low, and prior retesting the bearish trend line for the third time, and then breaking below it, heading towards the level of 138% Fibonacci extension level. This is not an exact science. This is a trading tips that professional traders can trade using a top-down trading method without violating the market pattern, the economy news, and the fundamentals. It makes sense? It is also powerful. I also highlight for traders that the 138% Fibonacci extension level is a powerful level that area where traders are watching, especially when we are talking about the flat correction, the expanded flat correction, when the price will form a high and then will display a new higher high in a zone of 138% Fibonacci extension level. This is a trading tip for advanced Fibonacci traders. All right? As always, this is a trading setup. One we will apply a top-down trading method to trade it like a professional traders. The most important thing is to control the risk and to time the market at the right time and the right place. By looking at the market environment, is the market bearish? Is the market bullish? The market is bearish, we are concentrating on bearish trade setup. If the market is bullish, we are concentrating on bullish trade setup, okay? Trading the market first before the financial instrument. I hope you have learned something for this video also, and we put it to use to make excellent stock trading decisions. We are the GSTW24 traders talking about stock trading tips for advanced Fibonacci traders. To summarize the video, high probability trade setup will very often take place on or near the level of 138% Fibonacci extension level if the price display a high and a higher high and retest the trend line that we have drawn and break above the trend line heading towards the 138% Fibonacci extension level. The opposite is also true in a downtrend when we are looking for a possible oversold zone on or near the 138% Fibonacci extension level in a downtrend. Okay? If you like this video, please give us the thumbs up. If you dislike it, please give us the thumb down. If you love it, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel it's time to subscribe to our channel so you may stay tuned and watch more tutorials like this one. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about stock trading tips for advanced Fibonacci traders. Happy trading to you all, and I speak to you soon.